ProTrader Mike. I'm founder of Mojo Day Trading. Thank you for attending the webinar today. I want to thank David and the crew again for having me aboard. Today's topics, one of my favorite, right in my wheelhouse. I'm going to speak to you about it, which is the longer term investing and trading, how I do that and how I've been successful. And you may get some golden nuggets of information right here and learn some things today, and hopefully you do. At the end, I'll take some questions and I'll present you with a really nice offer. So right here, you can see my screen. We have two styles of trading, day trading and swing trading. Today, we're going to talk more about the swing trading style, which is longer term, which takes a matter of days into weeks. When I was younger, I first started investing in the market. All you heard is things from your grandfather saying, you know, you buy and you never sell. And since that particular time, I've seen things tremendously rise up and then go all the way down, and have seen things tremendously rise up and keep going. So the market's its own beast. I don't predict which way the market goes or what it's going to do. I let the market tell me, and I use a system that other people have been very successful with. I'm not looking to invent anything. I'm just looking to make what other people have done a lot better. And I'll show you that today. So let me just close this window. Okay, great. Day trading, you're in for 6.5 hours. That's how long the stock market's open for. The time for day trading is very fast. You need strict focus and attention. You're going to compound your money greater, and you don't really use any charts. Now let's move over to Mr. Swing. Much more slower as far as speed of the trades. You get to do some more research. I can relax my attention. I don't have to look at it every 5 minutes. I can buy a stock, see what it does the next day. Either it's higher, buy more, lower, buy more, and then decide from there what I'm going to do. I never buy just once or twice when looking at a trade. I'll show you that. Compounding is a little bit less, usually making around 20 to 50%. I trade small caps on a monthly basis, where on a day trade, you can double your money 100% on a monthly basis. Charts I don't use on day trading, but I do use them on swing trading. Instead of showing you the PowerPoint, I'm showing you the pictures of my PowerPoint so I can paint on them. Right here are the two books that made my day. The first one was called How to Make Money in Stocks, A Winning System in Good and Bad Times by Mr. William J. O'Neill. That's this #1 book on Wall Street right here, folks, for like 50 years. He has this other stock too, How to Make Money in Stocks. William J. O'Neill. He's the editor of the Investor's Business Daily and the author of these two books. This is the Ken Slim. Well, right here, hold on a second. Right here. The Sunday Swing Trade newsletter is a weekly newsletter that I send out as one of my learning boards. I send it out every Sunday evening. The swing picks are presented in an organized fashion. You're going to see many of them today. So it's easy to understand and a great way for anybody interested in swing trading to get started quickly. If you're too busy to day trade and work in the 9 to 5, I myself, ProTrader Mike, I do all the research. Get your swing trade newsletter and email alerts when to scale in and out of the position, sell half the swing trade or all of the swing trade position. It's called the Ken Slim. It's an acronym. Each letter stands for a characteristic of a company. What I like to do is identify high probability stock patterns that repeat themselves over and over again. The patterns can be very profitable when executed consistently. I research and scan through a database of 8,000 stocks every Sunday evening. All these stocks have an emphasis on this Ken Slim system of picking stocks. These swing picks are selected as potential big movers for the week ahead. The average win percentage has remained consistent at 90% with the average hold time of 6 days and more. The average trade gain has been around 17%, and it's presented in a format in a PDF. This is the Ken Slim. Let's see if it pastes in. Hold on a second. When you see a company, the C stands for current earnings per share. The current earnings per share, the annual sales per year. The N is a new product or a new high. S is, we can write this all down, shares outstanding. L, leader. I, institutions. And M, market momentum. Real briefly, William O'Neill back years ago when computers first came around, a lot of data on a lot of companies, and he put all the winning companies that ever went from $10 to $100 a share in the computer, and he found that all these companies had 7 similar characteristics. They all had current earnings per share that were up 50, 100%, 30%. They all had annual sales per year up 30, 50% for a certain amount of years and time. They all had a new product. They had a new CEO. They had something new that was propelling them to new highs. They all had a certain number of shares outstanding, which was the sweet spot in the company before it made its big move. They were all leaders within their industry. They all had institutional sponsorship, banks, mutual funds, hedge funds, all owned, excuse me, some of the stock. And the market momentum, it had to be in the top industry groups, because if you liked coal and a coal company, and coal was ranked 197 out of 197 industry groups instead of the top 10, the coal stock's not going to move. If technology is moving with computers, you want to be in the computer section. And right here, where I learned it was back off these two guys. Years and years and years and years ago, I heard about this guy, David Ryan. And David Ryan won the U.S. Investment Challenge for 3 years in a row back in the 1990s. Okay? And he had tremendous, tremendous returns. And he was attracted to William O'Neill's Ken Slim system. The idea of studying the greatest stocks of all time, what made a great stock, made a lot of sense to him. And from those learnings and his followings and what he did, he set records for the U.S. Investment Challenge and won it 3 years in a row. Then I found out about this guy, Sid Moses, President and Chief of Portfolio Advisory Services in Los Angeles, a young guy in his 30s, really young. Just came on Wall Street. His hedge funds were up 70%. He won the U.S. Investment Challenge back-to-back years. What does he owe it to? He owes it to the Ken Slim system from William O'Neill. So I said, Sid Moses does it. David Ryan does it. You know what? Maybe I should continue to do that. And that's what I learned. And these are the Ken Slim stocks. Let me show you actually, if I could show you the Cisco, excuse me, before it ever moved. Here it is. So here's Cisco, guys. So let me show you Cisco Systems. I own Cisco Systems. You could see the chart right here. And let's go blue. I'll go blue. They have a new CEO right here. I'll say the pen works perfect. It's actually in black. So let's go blue. So right here, guys, the stock in the years of 1991 and 1990 right here, you bought 1,000 shares at $20. Let's do some math. At this particular time, The company got put in Fortune magazine in 1991. And they were earning 25-cent loss per quarter. And they were doing $2 million in revenues. 4 quarters went by. And a year later, they were in Forbes magazine. And right here, they did a 2-for-1 split. So you have 2,000 shares. It ran from 25 to 50. Right here, it runs from 25 to 50 again. You got 4,000 shares. It's in Forbes magazine now. They're losing 10 cents and they're doing 10 million a quarter. Damn. Another year goes by. They do another 2-for-1 split. Stock goes from 25 to 50 again. You got 8,000 shares now. Amazing. Amazing. Stock's at $30. You got $250,000 in it. And it goes right here and they make 10 cents. And the revenues go from 10 million to 50 million. Another year goes by. Stock does it again, goes from 25 to 50. Another 2-for-1 split. You have 16,000 shares of this stock. And it goes from 10 cents, it grows to 90 cents. It grows 900%. 50 million goes to 500 million. It's in the New York Times and they get a new CEO, does another 2-for-1 split. They do $2 a share in the next year, a quarter, and the thing's blowing up at $2 billion in sales. Bing, 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 bing. And you've got 32,000 shares at $50. That's wealth. The stock in 1991, 2, 3, 4, and 5 never broke the pattern of quarter after quarter after quarter of increasing earnings and sales, and it never broke the pattern. You never had to sell it. Every 3 months when they came out with the earnings, as long as they beat the quarter before, you held it. And if you did for 5 years, you created wealth. $20,000 turned into $1 million. And thank you, the Ken Slim system. So right here is many examples of some of the winners that I've picked in the last short period of time. And let's see the characteristics, because this is a learning experience for me. Specifically letting me know that what I'm doing is spot on and my patterns work. So let's see right here. I'm going to go to the pen color of blue. So right here, I always start on the left. Here's the earnings. They're going from a loss of $4 to a loss of $2.55 to a loss of $2. So I already know the next quarterly earnings ahead are going to be better than what they were before. So that's the C. And they don't have too much as far as sales. 44 million versus 40 million. They used to do 70. I'm not buying it for, that's when the stock was at 485. I'm buying it for here. Worst it could do is 73. I'm looking for it to bust 106, 151, and this number 181. The stock went up and tripled. This stock, all these stocks went up 100 to 300%. Why did they do that? It had 13 million shares in the float and 31% owned by funds. So I have the C, I have the A. They manufacture aluminum body car. I have the N, what they do. They're hot in the industry. And I have my price, risk, and reward. Stock went up 300%. And this was on 4/12 of 220 in April. Here's this one. This one, DSKE, it went up also. Why did this one go up and triple after my pick? Let's see. They lost $4.27, then losing 6 cents, then making 9 cents. I mean, the growth there, and analysts are increasing estimates right there. This is the William O'Neill database that I pull these stocks and do research every Sunday night. And I go through 8,000 stocks and I come up with my top 10. Look, they're going to do a new CEO. So I have the C. They did 32% increase here, 20% increase here, some C and some A. The N, new, what do? They provide open desk transportation service. This is when the rails during the corona, no one was stopping shipping and looking for the move up. It went from $1.34 to $4. It went and tested up here again. All the stocks I'm showing you went up and doubled and tripled in price from the date I picked them at $1.34. Here's another one. Let's see why this one tripled. Went from $1.63 to $3. Why did it do that? In blue, they went from $2.79 to $3 loss to an 82 loss. So that right there is a 200% growth. They're doing tremendous revenue. It should be up here at 4, but it's down here in the doldrums. Worst risk is 35. So I'm risking 30 cents. I'm looking for it to go test 213, which is 50 cents from there. Then it'll go test 295 and that's certainly what it did. 37 million shares in the company, 36% owned by funds. There you go. Let's look at this one. This one tripled too. Adel. Went from 150 to $3. Why? On 12/19. Let's go to blue. So they went from a loss of $2 to who knows. I don't know what they're doing. But right now it's in a base. So there's very little risk. And it's got a little volume bar right there. I'm looking for it to go through 193, 215, and 223. If it does, gone. Worst risk is 134 right there. And the stock did go through 215 and 223. Look at the float, 10 million, 7% owned by funds. Increase of volume from 130, a 258% increase. There you go. Same characteristics on every company. Here's another one. That was on 12/9. This is good education for me. It confirms my system. As I go through these, same thing. Look, loss of 36, loss of 4, gain of 5. Increased earnings estimates for the next 2 years. I know this thing's going to be a rocket ship. They're already telling me the next quarter, look, they did 12.7, 13.9, 13, and 14. Next quarter, 15. Next quarter, 18. Next quarter, 25. Why? Because they're telling me it's going to do that right there. 28 million shares, under 30 is the sweet spot. They got some mutual fund sponsorship, 6%, volumes up 348%, 129,000 versus 29, relative strength of a 91. This thing's busting through 149 and 155. This thing went up 200%. AIRI. All of them risked the nickel to make a 10-to-1 return, and they did. The next one was here. Same thing. TCON, and that was on 12/9. Here's another one on 12/22, the week after. TCON. Loss of $13, a loss of $7, a loss of $5. Increased earnings estimates for the next 2 years. I know the next 4 boxes after this are going to be amazing. It's in a base. The worst it can do from 244, it's at the worst, is 284. So I got this thing at the rock bottom. We're looking to go through 397, and it did. The float's tiny, 3.1 million, 67% owned by mutual funds. Insider buying right there. There you go. Stock went from 244 to $6. TCON. Here's CODEX. Went from 95 cents to $25. CODEX, 95 cents. Picked it on 11/17 of 2019. CODEX at 95 cents. Right there. Put it back in blue. Looking for it to go through 1, 2, and 3. Base breakout. Worst it can do is 96. It's already at 95. I'm already there. 500% increase in the last quarter. They go from a loss of 50 to a loss of 29 to a loss of 3. Increase earnings estimates for 2 years. I already know the next 4 quarters on 11/14, stock's going to rock and roll. It's going to do amazing. And did it? It went to $21 a share. CODEX. I picked it at 95 cents for the subscribers of that newsletter. Here's all the details Sunday night. I have to show you also, I didn't put in here my NVAX, NVAX winner. So here's NVAX, NVAX right here at 485. It's $140 a share. What did it do? Very similar to all the other ones. It did just what the other ones did. And this one went up exponentially. And I'll show you on the rail grind, which I show you in a couple minutes, how you're able to ride this from $4 to $140 a share. Increase estimates, $9.99 they're going to lose. They're going to lose $5, half of that. Then they're going to lose half of that. Increase estimates for the next 2 years. Volumes coming in right there off a base. Worst it can do is 523. It's already there. Best it can do is above 845 and 770. It went to 140. I picked it on 11/29 of 2019, the same time as CODEX. Same thing, 26 million in the float, 16% owned by funds. Same characteristics on every company. Here's iFresh. iFresh pick was for the Corona on 3/8. I said food delivery, everyone in the world's going to be quarantined. You kidding me? It's a no-brainer. I love doing that. Right here, I wrote it right there. Food delivery when the world is quarantined on 3/8. How can you go wrong? 18.4 million in the float, volume coming in, stock's going to go through $1. It's at 67 cents. It went to 3. It tested that, and blew through both of those. It was a no-brainer on 3/8. This one went up from 3 to 10. The rails and transportations on 4/12 at 383. It was a no-brainer. Same exact characteristics. So I got 383 in price. Increase earnings estimates for 2 years. They're going to make 12 cents, then lose 3, which I'm in now, and jump to 52 cents. I mean, a 500% increase coming on May 2nd earnings right here. Stock going to go right here through 389, and it's 383. So I got no downside, all upside to go test 652. Stock went to 10 right up here. Go look at the price. USX went to $10. This one went with it. US Truck, USAK, not USAX. Bought at the same time, same industry. Both of them tagged along. Look, volume up 250% at 425. Insider buying right there. Worst it can go is right there for 512. It could go lower, but it went higher through it. 8.5 million in the float, 37% owned by funds. Insider buying right there, going from a loss of 39 to a loss of 3 to making 76 cents. Company's going to lose 3 cents, and it's going to jump to making 76. Dude, and the price is only $4 down here, and it used to be in the 30s. I'm all over that thing, dude. Totally. Here is, you want to see another? Here's Moderna. Why I picked Moderna at $34 on 4/5. Second phase of the clinical trials of the novel corona vaccine Moderna, looking for the move up to $50 only and then higher. That's the rules. That's the trade play right there. Looking for the move up to 50 and then higher only. Float is larger. Funds own 41%. I'm going to risk $2 to make $20. 99 relative strength. It's going to bust through 38 and 34. It's already at 34. trading 16 million in volume. This stock went to 80. And it's still at 70. This stock went up 300% very recently. Solo. When Tesla first started to move, I jumped into this. This was on May 10th. Right here, newsletter, May 10th. We go to blue. These are all the same things. Look, 37 million, same number. Increase earnings estimates for the next 2 years. A loss of 85, a loss of 53, a loss of 57. I already know the next 2 quarters after these are going to be good, so I can hold it for a while. Risk is 90 cents and 89, double bottom. Going to pop through 109 and go to 255. It went to 305. It touched $4. Go look at it from 510. Telling you, man. And as it goes through 150, you're going to add 2 more times. Float 37 million. It's the perfect Ken Slim stock according to my proprietary technology in my database. Here's another one. Perfect. LightPath, LPTH, $2, went to $6. Why did it go there? Same thing. Here we go. Who knows what they're going to do in here, but something. 25 million, perfect number, 14% owned by funds. Last quarter, they did a 12% increase on a 99% relative strength with some insider buying right there. Going to bust through 182 and be the support to go right through 2. Where'd it go? It went to $4. Insider buy right there. Same thing over and over and over. They went from 7.9 million to 8.8 to 9.6. Telecom fiber optic, precision molded glass, fiber optic oscillators. It was number 5 industry group. Things are magnificent. Here's another one. Groupon. Why did Groupon just recently rage before the stock split? This is why. This was the time to buy Groupon. They're going to go right here. This doesn't really fit the particular scenario, but they got a new CEO and some insider buying. And it was before the split to go through that. And it really did work really, really nice. That was on 5/10 also of this year. These are all this year because, you know, I've done this for 8 years and 9 years. But all the ones this year are more relative to you guys. The stock went to $6. Why did it go to $6 from June 7th in 2 months? Why did it go up from $2 to $5? Why? It went up. It tested 675 and 875 and 665. They have 300,000 in the float. They design cloud-based platforms for apps and concierge services. Let's see what other ones I have here. Boxlight, DPW, and that's the end. That's the end of the chart. So I had to go through a bunch of my winners. Now I'll show you how to win, guys. File new. Boom. It's emotions. This is why people don't win. It's feelings. Nothing more than feelings sums up the stock market at any trading day. Investment return and risk are joined at the gut. No pain, no gain. And above all, no free lunch. Ideally, we like to approach investing like Cool Hand Luke and DDTG, Dave Day Trader, right? And lose $3 million. Here's Dave. The stocks don't always go up. That's not a system. Let me show you. He talks about it here.
From my crypto friends, you can't have weak friends. You don't get to steal a line from my crypto friends. You can't have weak hands. If you have weak hands, this game's not field.
Hear that?
Not field. Do you see my hand shaking? I'm down 700 grand. I lost like 4 million in a fucking blink.
Okay, he just made a mistake. He lost 4 million in a blink the other day on Charles Payne on TV. He started with 3 million. He went down to 1 million. I speak about it on my show. He said he made that back plus some which was the topic of my poll. You guys can go to my Twitter. I have a poll up here. Question: in your trading career, if you start, let's say, with 300,000 and you lose it down to 100, how many of the times have you ever made it back plus some in a short period of time? And there's 44 votes and 68% of the people and myself, there's no way you made it back. And he just admitted it right there in this video today.
I'm loving it.
He's loving it.
It was too easy the way I was stomping the suits. They were so quiet. I hadn't heard a peep from them for months. Ryan crickets.
Okay, bad, guys, bad. His system is the market always goes up. He's down millions of dollars. It's not the thing to do. I'll show you the thing to do and how to invest and how to trade. Okay. The system is not the market always go up. Okay. The market's based on a cycle of emotions, a roller coaster ride from optimism to despair and back. It's been like that for the whole time the market or any markets have ever been around. And understanding where you are on track can keep you from going off the rails and even to well-timed gains. Remember, patterns remain the same because people trading the stocks make the same stupid mistakes over and over again. This makes it easier for Mojo to win. Here's a look on how Mojo scales in and out with the waves and makes money while other people lose. Check this out. So Mojo right here on the cycle of emotional Joshin, when the stock is terrible right here and it's really bad, I'm going to scale in slowly. And this is my biggest one. So it's 1, 2, 3. Small buy on number 1, bigger buy on number 2, biggest buy on number 3. This is the first buy right here is on day 1. The second day is day 2, whether it goes higher or lower, I'll do that one. And then the third day is my confirmation. I'll buy the biggest on 3 days, scaling into this particular trade, building a nice position. Okay. Then the stock starts to go higher, a little bit of optimism, a little bit of excitement. I sell a quarter of the position. Into thrill, I'm selling half of my position for a profit. In euphoria, I'm selling most of the position or doing a covered call. I've taken my profit. That's what you should do right there in euphoria. And then the people like anxiety, denial. That's the first red bar right here. Fear, depression. That's the second red bar coming down right there. Then you got panic, capitulation, and this is the third red bar. That's doing my 1, 2, 3 now. I go in again right down here. And I do my 1, 2, 3, and I start the cycle over again. It goes hope, relief, optimism, excitement. I sell a quarter, thrill, and the whole thing goes over again, back and forth. And when you're on the right side of the wave, it makes it pretty damn easy. Let me show you why everyone loses and why Mojo wins. What the hell is a chart? It's a candlestick pattern that everyone does something with. Let me show you. So Mojo, as I just showed you, scales in right here. 1, 2, 3 with a tight stop. They're telling you to enter a short position when Mojo enters long. Okay, it's the opposite of what everyone has been telling everyone for hundreds of years. Okay, Mojo scales in at the bottom, I told you, into despair down here. 1, 2, 3. As soon as it crosses here, I did my third buy. It comes up to a top. I could take a profit if I'm short term, depending upon how long that move is, and I could do it again. I'm waiting for it to break out right here. I want to hold my position for the breakout. So when they tell you to buy entry, I'm selling right there. And now you got optimism. I'm selling and thrill. I'm selling 2. Into euphoria right here. I'm selling 3, right? And then boom, you get crashed and you lose. Mojo scales in here. 1, 2, 3. Your entry is my first sell. As soon as it starts to go up again, I'm selling again. And now it goes down and you get crushed. You get very little gain and big losses. That's the way the market works. Look at this trade. I bought in down here, 1, 2, 3. By the time you entry, dude, you know how much I'm up right here on your entry? I already bought it down there with very little risk. So it's the opposite of what they tell you. Your entry of a short is my long. Your entry of a long is my sell. Your entry of a long is my sell. Your entry of a sell is my buy. It's so unbelievable, dudes. Telling you, man. Telling you. There's a trade play that I do. It's called this. Check it out. It's called the wow trade play. Sometimes you're in a stock and you sell it. Write this down, guys. Wow. It means you sold it and you said, wow, like maybe the next day or maybe an hour later. I promise you, and promise you. I've already written it down, journaled it, done it 1,000 times in a row, and it worked 1,000 times. The stock went higher after I said, wow. Remember that. I developed this play called the rail grind to stay in it after I say, wow. I do this in day trading and swing trading. Check it out. Here's the chart on it. Once the green line goes above the stochastics, this is the 80%. Let me switch my color and go to pink. Love pink. 80% on the stochastics. I bought it down here. I did my 1, 2, 3. I wrote it up. As long as it stays above this line, I'm in. The stock went up 300% over this time, or it went up 100%. And that's how it worked. The volume stayed in it. It crossed the line. Let me show you Tesla this week. Perfect example. Here's Tesla. So Tesla did this. Let me go to my pen and go pink. So Tesla right here, say, right here, 270. It went through the magic 300 right there. That's my number. So on that, dude, it created this V. See that? It's called a V band. The stochastic rose up above. This is the 80% line right here. And right here, on this red bar, it came down. But then on this green bar, shot back up to a highest point. Then on this red bar, it came back down. Then on this green bar, it came back up a little. And then on this green, it came up a lot. And this is the top of the, it can't go higher than that. And then on this red bar, it came all the way down. But then on these 3 greens, it came all the way back up. And on this red, it came down. And then on this green was humongous. You wouldn't have expected that green. No way, no hey. I know. And then boom, look at that right at the top. So you were able to ride it until it crossed STO right there. At that mark, you'd be out of the trade. So you actually saw a top up here at 490. This could have gone back up, but it didn't. It failed, and it stopped you out right there as it crossed STO in that 80%. That's an amazing ride. That's the ride in Tesla on the way up in the last 2.5 weeks. Whoops, I messed that up. So you right here, you see the cross. I did my thing. This is the way up. See it? You're just patient. See the separation between these 2 bars? You're just riding this thing up, man. Here's 80% right here. As soon as it gets above this, told you, it stays above until right here is your sale. And look what you captured. Exactly what I drew right there in my mind. Amazing, isn't it? Let me show you Apple. Did the same thing. Remember the historic run this past couple of weeks on Apple? Had to stay in that and do that, right? Watch. Here's Apple. So Apple did the same thing. Apple did a V-band break separation on this gap right here. This was $100 a share. Nice number, huh? And it continued from there. This is the chairlift up. This gets it in rail grind. So right now we're above 80%. And it just stays up here. It never comes down. Look, crossed up. That's off, dude. That's 85. This is 80. Whoops, that's 75. This is 75, so it's a little bit above this mine. Look at the height above this thing, dude. This thing never goes near anything. Right here is your sale. Right there. Look at that. This is the biggest move on Apple right there, dude. This is from 100 to 100, and that's 100%. That's the 100% move on Apple. Amazing how it works. Amazing how it works. So this is what I tried to help Dave with, but he didn't listen. I try to help him with my covered call strategy. So here it is. This is what you got to do for long-term investing. The real estate flipper versus the covered call writer. Everybody's into the real estate too. Some people can't understand this analogy unless I explain it to them in real estate. So you have stock. That's the champ. And then you got the real estate. You collect money on the first day, rent. So as soon as I do a covered call, I'm collecting some dollarinis. And when you do a house, you actually got to spend money on day one. You got small time value. You got small money tied up. Small amount of work, small amount of risk, and a big return versus a big time value to be a renter and a landlord. Tying money up big time work, big time risk, and who knows what your return is at the end of the day, right? So let's show you right here what a covered call is. So now you know how to buy the stock. Now I'll show you how to keep it for the long term. Covered call. Let's say you invest $100,000 in real estate with a rent that pays you $1,000 a month, $12,000 in real estate return of 12% annually. It's a big freaking return, dude, on a $100,000 property. Better ask somebody. Now let's invest $50,000 in Microsoft at 50, half the amount of money, 2,000 shares. You get 100 grand because you get some, you're using the firm's dollars. Option premium you collect is $1,000, $12,000, 24% return because it's on half the money. So you're collecting $1,000 premium. And that's how you learn. I teach that in my courses. I'm going to show you an example right now. I call it the triple threat. Let's see here. File new. I call it the triple threat. I did it on Shopify for Davey Dudes the other day to buy the stock at sorry, Dave, at 900. It's 936. You should have listened to me, Dave. Dave, you should have listened to me. Let me explain. Let me explain my triple threat strategy. The other day, this was at 1,000. Okay? Dave liked it at 1,000. Now it's 936. Ouch. But at 1,000, here's what happened. It was 1,000. It was 1,100 actually. It's where he owns it at 1,000. That's why he's down millions of dollars. So let me show you how this insurance can protect your position. Whether it's $1,000 stock, $100 stock, or a $10 stock, it makes no difference. I'll give it to you on this big example and then an example that I have personally. So this is for the Dave and the guys that are big time out there that may have Apple and Shopify and these big kind of positions. So right now, the first thing you're going to do is you're going to sell one contract. It represents 100 shares. It's a put. One put contract. And it was at 1,000, not saying where it is today, but this was the other day at 1,000. Stock's at 1,000. You're going to sell a $950 put. The premium was $50 because the stock was 1,000. So here's what's going to happen. In 1 month, and it already did, the stock is going to be the same. Actually, it's going to be higher. HIGHER. Number 2, it's going to be the same price as it was when you did it. Or number 3, it's going to be lower. So if it's higher, and let's say it's a 1,200, oh my goodness gracious, and this contract is worth $5,000. It costed you 100 shares at 900. This is going to be a $95,000 trade. You want to buy it anyway and put 100 grand into it, but hold it. Don't do that. Sell a one put contract. Strike price is 950. Premium's 50. You get $5,000. If the stock is higher in 1 month, you keep $5,000, 50 points for doing nothing. That's pretty good. That's pretty good. If the shares stay the same, you sold it at 1,000, it's at 1,000, you make $5,000, dude. 50 points for doing nothing. Amazing. If the stock is lower, like it is now at 936, you have to buy 100 shares at 950. You wanted to buy it anyway at 1,000. Now you got it at 950. You get to keep the 50 points. So you're buying it at a cost basis of 900. And 900 is a lot better than 1,000 where it is today. Okay? That's on Shopify. Now I'm going to show it to you on a stock that I own. I own, what is it? TLRY, ACB, and let me show you. I have CRON. I have the $6. I'm down 15% on that stock. I could show it to you on that one. I have CGC at 13. It's at 16. I'm up on that one. And Aurora Cannabis at 725 is 780. I've already collected $4.50 in premiums on CRON. I've been doing it since 11/15. I'll show you that example right here. Perfect example, Mojo. Check this out. Long-term position with my covered call. I've already collected $4.50 in premium. I've owned it since November of last year. Let me show you. Check this out. So we'll do it on an example of 1,000 shares. 1,000 shares at $6.35. The stock is $5.34 currently. I sold a $6 a covered call is the first thing that I did right here. So after I got put the stock or whatever, I sold a covered call. So now I'm in. So I got put scenario on Shopify. I now own it. Put scenario on CRON. I sold a $6 put. I own it. I own it at $6.35. Stock's 5. I'm down 15%. Let me show you how I can make this all back plus some overtime. I really like CRON. I think it goes to $10, but I'm willing to wait in the meantime. On September 25th, $9.25. This option expires. I sold the $6 strike price. It's currently at $5.34. I got 40 cents for it, 6.6%. At expiration, this collecting of $4.50 will be $4.90, and I'll do it again. Okay? 3 things are going to happen in a month on 9/25. The stock's going to be higher. Okay? Stock's going to be the same, or it's going to be lower. Let's discuss if it's higher. If the stock is higher, it's right now at 5.30. It has to go above 6. If it's above 6, no matter where it is, I sell it at 6. Plus, I keep that 40 cents. My sale price is $6.40. Right now, it's $5.30. Would I take that? You better believe it. Totally. Is it going to 6? It's at $5.30. No way. I'm collecting 40 cents. Okay? I don't think it gets there. I think it stays the same where it is right now, in the 550 range, maybe 570 even. Who knows? If it's the same, I make 40 cents for doing nothing. And then I'll go out to 10.25 next month, and I'll sell a $6 strike again for another 40 cents. And then it'll go to $5.30 at the end of that month. And then $5.70 at the, well, $5.60, all the, because the stock's $5, $6. The lower it goes, the lower the premiums are. The higher the stock goes, the more the premiums are. If the stock goes lower in this example, I make 40 cents for doing nothing. It's my insurance. If I didn't do this covered call and the stock went down 40 cents from 534, I'd be down 40 cents, but I get to keep it. So it's my insurance policy against any downturns in the stock. So the first thing you do is you're going to buy 1,000. Oh, you're going to sell one put because I love the stock. So on CRON, I would sell 10 puts at $6. The premium's 40 cents. It's like I'm buying it at 560. The second thing I'm going to do, that's trade one, is I'm going to buy 1,000 shares because I love it at wherever it is, $5.50. I love it here. Doom, that's long $5,500. And as soon as I do that, I'm going to sell a covered call for my $6 in a month or two from now. I'm going to bring in a 7% premium. So in 30 to 60 days on this position, I'm going to win here 40 cents. I'm going to win here 40 cents. And I'm going to win here 50 cents because the stock got called away at 6. So that's 40, 80, $1.30 in winnings versus a normal 40 cents or 50 cents. If you would have had the stock, you would have just made 50 cents. You wouldn't have made the put. You wouldn't have made the covered call. So it's $1.30 versus 50. You make an extra 80 cents in my scenario. Why wouldn't anyone do that? It's called the triple threat. Threat 1, threat 2, threat 3. You're kicking the stock's butt. That's what Warren Buffett does, by the way. So I'm not making this up. This is just what Warren Buffett does. On Coca-Cola, which he owns the whole kind of company, what he did was the stock was at 50. He sold the 45 put for $5. If Coke dumped, it was at 52 to 45, he would own 5.1% of the entire company. He'd sell so many of these puts that if Coke went down, he would now be a majority shareholder. And then he would go in the open market, buy more of it, take over the board of directors, and then run the company. and then take the stock from 50 to 200 and he owns the whole company. First thing he ever did was sell puts. That's all he did. And that's it, guys. So that's my long-term strategies on what I've done and how I've done that. And if you want to join my swing trade newsletter, which is every Sunday night, you can go to my website, mojodaytrading.com, click on swing trading, and you'll see there's the Novavax pick. And I do my research. And right here, how the newsletter works, this great instructional video I made, 16 minutes long. I go through the whole thing. How do you do buy number 1? How you do buy number 2? How you do buy number 3? These are examples of some past newsletters. You can click on it right here. Shows you the actual newsletter, what the trade plays are, the structure, how much to put dollar amount into each pick depending upon the price. What happens if the stock goes higher? What happens if it goes lower? What happens if it stays the same? What to do in each of those scenarios? The rules, how to sell for profits, how to maintain your losses, my market analysis for the week, my comic strip for the week. What happened to you? Oh, I joined the wrong newsletter. I don't care how many millions he's made with ProTrader Mike. I bet he'd prefer a walker. Funny. Was my comic strips. Got a couple of hundred of those every week. 6 picks, dust, AESE. And there's how they come, just like you guys seen them, man. So join the newsletter. What I'll do is I will, as a bonus, whoever joins today, check this out. I'll give you a special offer. I will give you, if you join today, for $149 this, my course for free. I have a course in Mojo University, my swing trading course. I'll give it to you. It's normally $1,497. It's around an hour long and explains in detail, much further than I did, all about the Ken Slim and more chart scenarios. You become a member of the newsletter. It's $149 a month, right on my homepage of Mojo Day Trading, right here. Just go to mojodaytrading.com, scroll down, and you'll see it right there, Swing Newsletter. If you want to join both, I welcome you aboard. Thank you, guys, and see you next week for another new topic. ProTrader Mike signing off. Later.